Welcome to the Fear and Greed Business News Afternoon Report for Thursday, the 10th of August, 2023. I'm Michael Thompson. Every afternoon, we've got the 5 stories that happened today that you need to know about, so let's jump into it. Story number 1, the S&P ASX 200 closed up 0.3% today to 7,357 points. Lake Resources was the best on the bourse today, closing 27% higher ahead of an update it's giving at a lithium seminar in South America. Next best was construction company Boral, with shares up 8.5% after posting full-year results revealing a 17% jump in revenue to $3.46 billion. Coal and resources companies really led most of the top rises. Sayona Mining climbed 7.7%, while New Hope and Paladin Energy were both up over 5%. AMP was up 4.6% following its own results today. The tech sector was the worst performer, with Xero down nearly 4%, but outside tech, contracting company Downer EDI shares fell 6.4% after cutting its dividend and reporting a $386 million loss. One other worth mentioning is AGL, which recorded a $1.3 billion loss for the full year and was sold off by investors today, down 3.4%. On to story number 2 now, and there are some early signs the labour market is cooling in Australia. The Australian Bureau of Statistics released new payroll jobs data this week, showing a 0.2% fall over the month to mid-July. There's a bit of seasonality at play here, with school holidays and the end of the financial year having an effect. But despite this, the Bureau's analysts say the last year's worth of data shows less growth than the same time period in 2022. Now, bear with me for these numbers just for a sec. But in the year to mid-July 2023, payroll jobs were up 3.7%. And for the 12 months to mid-July last year, payroll jobs were up 4.5%. Now, this indicates that the latest monthly slowdown is more than just a blip. This is a small but critical data point for those looking for signs that the economy is cooling. Story number 3, there are calls for the government to close the Future Fund and sell its $250 billion in assets to pay down government debt. A new paper published by the Centre for Independent Studies claims that the government-owned fund will not be able to deliver strong enough returns in the future to justify keeping it running. In fact, the right-wing think tank reckons the nation will save $10 billion a year in interest if the fund's assets are used to improve the bottom line instead. The Future Fund was initially established by former Treasurer Peter Costello back in 2006. It was funded initially out of government surpluses, and the report argues that the Future Fund needs to secure returns of 4.1% per year after costs to break even, compared to the benefits of paying down debt due to the higher cost of interest. The Future Fund's average annual return has been higher than that. That's been about 7.7%. Story number 4, the National Broadband Network is looking into the low Earth orbit satellite technology used by Elon Musk's Starlink as a replacement for its Sky Muster system. This is interesting. NBN co-chief executive Stephen Rue told the Sydney Morning Herald that he wasn't intending to scrap the existing satellites until the end of their design life, but using the technology in future could be an option alongside putting some users on fixed wireless connections. He said the low orbit satellites are not built to carry large volumes of data by lots of users all at once, which actually limits its usefulness for the NBN. The Sky Muster satellites were launched in 2015 and in 2016 as well, and tend to have a lifespan of about 15 years, so they've still got a bit to go. The decision might have to be made, though, sooner rather than later. NBN Co. also announced full-year results with revenue of $5.27 billion, but $25.8 billion in debt. And story number 5, Sign Advisory, a former division of PwC sold off for $1 during the tax leak scandal, has managed to secure contracts with federal and Victorian government departments. The embattled consulting firm's public sector division was bought by private equity investor Allegro Group in July with an agreement to pour $100 million into the renamed business. The Australian Financial Review reports that it has also become a pre-vetted supplier of cloud computing services for the Commonwealth, though whether it will actually then win these contracts will still remain to be seen. Under PwC, the public sector division brought in about $600 million in revenue last financial year. That's it for the afternoon report for Thursday, the 10th of August, 2023. We'll be back tomorrow morning with the Friday edition of Fear and Greed Business News. I'm Michael Thompson. Enjoy your evening.